How can an average investor uncover hidden opportunities in the stock market and achieve extraordinary returns by thinking differently from the crowd? Joel Greenblatt unveils unconventional, yet highly effective strategies that empower everyday investors to beat the market by focusing on special situations, unique investment opportunities, often overlooked by Wall Street. This book is a treasure map for those willing to do the research. Stay patient and think independently. Part I: Rethinking Investment Success, Why Most People Get It Wrong. Greenblatt opens with a bold statement: most investors fail because they follow the herd, rely on mainstream advice, and avoid doing the necessary homework. True success comes from digging where others don't. Key lessons: you don't need to be a professional to beat the market. Special situations can offer outsized returns with lower risk. Research and patience are your greatest allies. Mindset shift: avoid index thinking, seek out inefficiencies. Part II: What are special situations and why they matter? Special situations include corporate events that temporarily distort stock prices, creating opportunities for savvy investors. Examples of special situations: spin-off, mergers and acquisitions, restructuring, rights offerings, bankruptcies and post-bankruptcy stocks, asset sales and recapitalizations. Why they matter: these events create temporary mispricings. Institutional investors often avoid these stocks due to size, complexity, or restrictions, leaving opportunities for individual investors. Part III: Spin-offs, the hidden gold mines. One of the most powerful special situations is the spin-off, where a company separates a division into a new independent entity. Why spin-offs work: often mispriced due to forced selling by shareholders who don't want the new company. Management incentives align with shareholder success. The new entity often has better focus and growth potential. How to analyze spin-offs: study the spin-off's financials separately. Look for insiders owning shares. Focus on bad bank, good bank scenarios where toxic assets are separated. Real example: the Marriott International split led to a highly profitable outcome for early investors. Part IV: Mergers, liquidations, and restructurings. Merger arbitrage and restructuring events can yield consistent profits when analyzed carefully. Opportunities include buying stocks of companies undergoing restructures, investing in firms being acquired where deal closure is highly likely, playing post-merger undervaluations. Key considerations: assess regulatory hurdles, understand the likelihood of deal completion. Caution: these deals can be complex. Patience and deep analysis are essential. Part V: Rights offerings and warrants, overlooked tools for gains. Rights offerings give existing shareholders the right to purchase new shares. Often at a discount, most investors ignore them, creating inefficiencies. How to profit: look for deep discounts. Exercise rights when the market undervalues the future potential. Warrants, options issued by companies, can amplify gains if used wisely. Risk control: always assess dilution risk and future company prospects. Part VI: Post-bankruptcy stocks, a second life for beaten-down companies. Bankruptcy doesn't always spell doom. Companies that successfully emerge can offer enormous upside. How to evaluate post-bankruptcy plays: focus on companies with manageable debt loads post-reorganization. Examine new management, business model shifts, and strategic focus. Case study: investors in post-bankruptcy Chrysler saw substantial gains when the company rebounded. Part VII: Asset sales, recaps, and hidden value. When companies sell off divisions or restructure balance sheets, they often unlock hidden value. Opportunities: look for undervalued assets. Buy when proceeds from sales are used to pay down debt or return capital to shareholders. Practical steps: read press releases and SEC filings closely. Assess how the market is undervaluing future earnings power. Part VIII: How to research special situations. Greenblatt emphasizes the importance of doing your own homework using available resources. Research tools: SEC filings, 10K, 10Q, S1. Press releases, proxy statement, insider ownership reports. Analytical questions: 1. What is the company's true earning power? 2. What is management's incentive? 3. What is the potential downside? Part IX, managing risk and building a portfolio. No single stock should make or break your portfolio. Diversification across multiple special situations reduces risk while preserving upside. Portfolio strategies. Spread investments across 5-10 situations. Avoid overconcentration in volatile sectors. Risk management tools. Position sizing. Stop-loss considerations. Patience for long-term results. Part X, the psychology of a stock market genius. Behavioral discipline is key. Greenblatt highlights the psychological challenges that sabotage most investors. Mental shift. Detach from daily market noise. Accept short-term volatility. Stay humble and patient. Success formula. Discipline plus diligence plus differentiated thinking equals sign market outperformance. Part XI, real-world case studies. Greenblatt provides detailed case studies to show how these principles work in practice. 1. Marriott split. 2. Liberty Media spin-offs. 3. Post-bankruptcy plays like Continental Airlines. Each case study highlights how careful analysis and timely action can deliver extraordinary returns. Part XII, implementing your genius strategy. Steps to begin. 1. Start small, choose one special situation to analyze deeply. 2. Build a diversified basket over time. 3. Track results and refine your process. Resources for success. SEC Edgar Database. Value investing forums and newsletters. Books and shareholder letters from great investors. Conclusion, the genius within you. Joel Greenblatt's You Can Be a Stock Market Genius is not about secret formulas, it's about learning to think differently. Act with discipline and recognize that real opportunities lie where others fear to tread or simply aren't looking. At Grow Reads, we believe in the power of knowledge to unlock financial freedom. If you enjoyed this summary, please like, share, and subscribe for more content that empowers your investing journey. Stay curious, stay diligent, and keep growing with Grow Reads.